Are we watching a suckers rally unfold on Bitcoin right now, whereby the price rises and then eventually dumps on the unsuspecting buyers? And if this were the case, what would happen to Ethereum, Solana, and the other altcoins? That's what we're discussing in today's video. So hit the like button and subscribe to the channel if you're new here. It's your home of macro cycle analysis. I'll also cover the stock markets and commodities, as we're also seeing new fresh all-time highs for gold and new fresh 14-year highs on silver. Plus we'll cover the 18-year US land cycle. Okay guys, let's start with Bitcoin down 14% since the top. However, the last couple of days we've seen some good green movement to the upside. Is this a suckers rally? That's the question that I'm posing right now. Now, we've been watching a couple of key signals on the way down, and we're looking at key support areas for Bitcoin to overcome in order to invalidate the suckers rally. The first being $116,000. So this is the 50% level. You can see 115,891 rounded up to 116,000. Now, just above that is around 117,000, which is the 7-year resistance line, was support, now resistance line, that we've been tracking through each of the peaks through the previous cycle. And Bitcoin basically respected that line very, very well before it broke down, respected it again as it attempted it for the second time, and then broke down, used it as resistance, and now we find ourselves at 111. So it's still an important level to watch, at the moment being a resistance level. So a pretty key level there, around 116 to 117. So anything in between over the next couple of days, we start to see this price rise and then get rejected around here at 116, 117. It could potentially be a suckers rally. And a suckers rally, dead cat bounce, same sort of thing. You're basically seeing the price rise and then fall again to test some of the prior levels. Now, if it did get up that far, the positive to that is it would be the longest rally that we've seen in this entire downtrend, and the downtrend being 14% down from the high, lasting 18 days, $17,000 from the top to the bottom. Just 7 years ago, Bitcoin did $17,000 in an entire cycle, well, 20 grand, close enough to it, in an entire cycle, and now it's doing it in 18 days. So pretty crazy to think about that. But nonetheless, the suckers rally into that 116, 117. If there's some sort of rejection from that point, then we look for a higher low for strength, or if it tests the low, we look for the next support level after that suckers rally or dead cat bounce. And those levels to the downside, first being around 105. This is this swing level here, this swing low. Also some of the tops, pretty good level there should it find some support. Otherwise, the major 50% comes out at $99,000 to $100,000. So that's from the low here to the top. That clean level, you've seen the support there as well on the way up. So these could be some pretty good areas if it were to be a suckers rally. Now, the other major signal that we've been tracking is the 3 red weeks. You can see 3 red weeks, 1, 2, 3. You've seen a rally, which led to about 9% or so in the last case. And then after those 3 red weeks, the market then tested the low of that area and then broke through it. Prior to that, you got 3 red weeks here, 3 red weeks here. Of course, it's followed by a 4th here and a 4th here, but we're looking at the 3 of the red weeks and then how the market has rallied and then fallen back. The rally low to high, roughly 13%. So we've got a 9 and a 13. It's showing that the sellers are overcoming the buyers. So the buyers are trying to step in and buy the dip. You would have heard that many times before in crypto. So they're all buying this dip. They buy the dip. Here we go again, 9% to the upside, and then the sellers crush them yet again. So you get this extra dip, and then the market tests it again. Of course, it's recovered from that point. So we're just looking at this as a temporary 2 to 3 week sort of arrangement here. If we see this rally up and then a correction, the other 3 red weeks and rallies, you can see back in the prior cycle around July into the lows here of August and September. So roughly a seasonal period here, low to the top, 6%. Another 3 red weeks, that rally was low to the high, 10%. So you can see we've got a range here of about 6 to 13%, somewhere in the middle, call it about 9%. If we were to see 9% happen from this low, that would take us all the way up to dead on the 50% and the $117,000 level. So it is within reason that we could see this rally up that sort of 8, 9, 10 or so % into the level and then have another flush out to the downside. Something else that is also being watched a lot is your 20 and your 50 weeks. The 50-week moving average coming in around $96,000. And this is moving up at a rate of about $1,000 to $1,100 each week. You can see here at the top left, each of the weeks there is rounded up is $96,000. Last week was at $95,000. Week before $94,000, $92,800, $91,600. So you get the idea. Around $1,000 to $1,100, starting to slow at the moment because the price action is slowing. So if this happened over the next 2 to 3 weeks, you got the rally this week, and then you've got the decline next week. This would then push up to roughly around 97. And if it happened the week after, leading into the interest rate announcement, which is coming up in about 2 weeks' time as the market prepares to figure out what it wants to do next, 2 weeks would have us somewhere around $98,500, which is very close to the 50% level as well, which is also very close to the low that came in June. That low is at 98,200. So you could also be lining up with a scare, a nice little double bottom on a longer term time frame here than something like a daily or an hourly. You got a weekly, if that occurs, the double bottom, and then maybe we start to see the markets rally out of those levels according to our cycle analysis. Now, our daily videos cover many detailed charts, data, indicators, and our forte, the cycle analysis, to help guide us through the investment cycle. So if you're a brand new subscriber to the channel, then I highly encourage you to get our weekly reports on Bitcoin, altcoins, and the economy, including the real estate cycle. They're easy to read in under 5 minutes each, making them extremely digestible for all investor levels. There are 3 reports coming your way starting your week from Tuesday. It'll get you up to speed on how we forecast the markets and how we've been able to profit during uncertain times leading into and out of the cycle peak. It's completely free, so subscribe today using the link in the top of the video description and you'll receive your first report shortly. Now, the cycle analysis I refer to is the composite cycle here for Bitcoin. This is looking at the 2020 cycle and the 2015 year. Now, it's not typical that you would hear many people talk about these sorts of cycles, but as you can see from the chart in front of you, it has produced a very similar pattern to those 2 years combined. Often traders or analysts or online analysts, they like to look at a 4-year cycle of the halving, or they look at the start of the year. I don't think those things give it a very good representation of what we could potentially see coming up. We like to look at 5, 10-year, 15, 20-year cycles, which is what Gann used to do in the early 1900s up until his death in 1955. So this is the sort of stuff that you learn from Gann. Very, very helpful for your long-term trading and investing, and you can use it across all markets. Looking at the stock markets, maybe you're invested in stocks, maybe you're looking at commodities, gold, silver as an example. And so these longer-term cycles tend to have some pretty good repeating patterns. For now, Bitcoin is still building that history. So we're combining the 5 and the 10-year here, and for our year in 2025, it shows that, well, the roadmap is looking towards some consolidation in September, a little bit of a downside here into the mid part of September, minor rally, another higher low here, and then the Q4 looking pretty good. So we've got some sweet moves here through October and November. So it's still looking relatively bullish, even if we got to churn through a suckers rally and then another test of the lows. That would be the rejection at these $116,000 to $117,000 level. Now, if it's not a suckers rally, we would see closes on a weekly basis above these levels, so above the 116, and that would then drop the probabilities that we would see the market come down and take out the 107. So it could still come back down, but you would start to see the strength up here, which would then suggest that we might get a higher low forming over this period, leading into potentially the interest rate announcement, which seems like what the rest of the market is waiting on. So overall, things are looking relatively good here. Even if this is a suckers rally, it doesn't suggest that the rest of the cycle is over by any means, but we did hear a lot of those calls over the last few days, people thinking that the market's about to collapse, and probably because the fear and greed index was hitting fear. Every time we drop into something orange, which is the fear reading here, the noise of the people saying the cycle is over, you just wait, I'm telling you it picks up. And it's maybe the same people that do it every single time we see a new high. The market dumps into fear, rallies out again, comes back into fear. Through this period, they're telling everyone that the cycle is over because they heard some sort of Bitcoin on-chain analyst, something or other, some pure multiple or whatever the hell it is, the flavor of the day at that time is hitting some sort of signal. And then they all disappear as Bitcoin rallies again and hits a new fresh all-time high. And then they'll come back through this period. Here it is again. There's this multiple, there's that indicator, there's whatever the hell's going on. And then of course, Bitcoin rallies back again. So eventually those sort of calls will be right. There's always the case. There's always one all-time high and then the market collapses. But it's not that it needs to happen every single time. And I think it's a pretty good sign that we saw more people come back around these lows over the last couple of weeks, calling that the cycle top is in 124. That's it. Pack it up, go home, that sort of stuff. Meanwhile, the price structure itself hasn't necessarily broken down yet. We're still holding above the 50% level at 99 and the tariff low at 74. So some of the major points there are still holding up for BTC. Now, another interesting thing is that Trump launched his WLF token in the last 24 hours, his World Liberty Financial token, and the market didn't shit the bed. Last time Trump did something, the market shat the bed. He had the tariffs, and then he did his coin launch, something else that he was scamming the market for back here on the 20th with the Trump token, and then the Melania token came out the next day, and the inauguration was around that time, and it was basically the all-time high at 109,000. The market crashed from that point. So it was launching cryptos as he was becoming president. Market collapsed there. There was this day here, March 2nd, he talked about something else. I think it was a crypto Bitcoin strategic reserve, huge pump up on a single day, and then the market could not keep going higher, which was a signal in itself, and the market continued to fall from that point. So it wasn't until late April, that I was able to get back above the top there, where he made his announcement about a strategic reserve. And so this time we have the launch of a WLF token, and the market hasn't shut the bed. It's actually gone up a little bit in the last 24 hours. So it's not to say that the markets are loving this, but at least it's not collapsing the market like it did last time. So I think that's another positive sign there. And the Bitcoin ETF flows, they're not crazy to the upside, they're not crazy to the downside. So we're not getting a mass panic sell-off, and we're not getting a mass FOMO buy-in like we've seen in some of the other occasions here. So you can see July around these peaks, huge ETF inflows. That's this period here as the market broke out of that 7-year resistance level, consolidated, and then tested it a couple of times. And the same deal for the Ethereum ETFs. Right around its top, we had some crazy ETF inflows. So a few of these indicators to me are suggesting that there's still more time to go in the cycle. We haven't seen the major crazy, moves to the upside yet. And we haven't seen the breakdowns yet, the real extreme, fearful collapses of the market. So that's good signs. Fear and greed index sitting at greed, takes some time to consolidate the move. The Google Trend search volume is also looking okay here. It is falling on the 12-month chart for crypto and Bitcoin, so not being searched as much in the longer term. However, got some good news. We're at 15 for crypto, 30 for Bitcoin. The lows 12 months ago were slightly below this. So Bitcoin was at 28 and crypto at 11. So it's still being searched more than 12 months ago when we were around a similar low period in the market. Go back 12 months. This was right around here. So there's August low, September lows through here as well, through this higher low. So still looking right. But the good news is the 90-day chart, and we can see this just start to tick up. So on a shorter term basis, Interest in crypto has ticked up over the last few days, going from 15 now up to 21, and Bitcoin up to 35, coming from a base of 29. So there's still some more interest in this coming through. I think that's a great sign. Exchange volume, however, shows a different picture here. So you can see how these indicators, some are looking positive, some are looking negative, but there aren't any to suggest that it's all one way up or all one way down. So yeah, I don't think it's anything of a concern here. Another reason for a potential suckers rally and then a crash, more so from the altcoin point of view, is the daily exchange volume. We're seeing lower highs and now short-term lower lows. So not as much interest coming through into the exchanges, but we haven't crashed all the way back to the lows of July here at around $30 billion over the course of the 7 days. It's still sitting all right here at around 55, 60 billion. Even if it comes back into the 30s, 40s, it's still sitting at a relatively equal level to where it was about 12 months ago. So again, still some interest there. MicroStrategy, which we've been using as a bit of a timing mechanism towards the end of the cycle, hasn't broken down entirely from the lows here at 230 bucks. It's sitting just underneath the 50% at 345 now. That's this 50% of the most recent low to high, so the most recent rally, which could potentially be a lower high in the making, which isn't a great sign long term, but we haven't seen the breakdown yet. I suspect if we see the breakdown like last cycle, things are really looking bad for the overall cycle. You can see MicroStrategy put in a lower high again before Bitcoin, before Bitcoin, and then started to crash, took out the lows. Here is December, Bitcoin had a rally, and then basically it collapsed through January. So it took out all of the lows through that entire period where Bitcoin was still putting in new fresh highs. So Bitcoin put in a new all-time high in April, it put in a new all-time high in October, and it put in the final all-time high in November. Meanwhile, MicroStrategy was basically distributing and getting ready to crash back down to earth. Could be in a similar position once again. Ideally, it holds up for a little bit longer for this cycle to play out, and then markets repeat as they usually do. Markets' expectation is that there is going to be a cut, so we're still sitting around 91%, 8% for a pause. This is down. This was rising to about 20%, and now, of course, it's all gone back this way. This is different. This time is different compared to the other interest rate meetings, where as the meeting date got closer, a lot of the market expectation was shifting towards the interest rates being on hold. This time, the cut has started to take back some of the probability, and it's remained in very, very firmly towards a cut. So it looks like the market is pricing in that cut. The wild card would be if Powell doesn't cut. So that's going to be a little bit of an interesting game in the next 2 weeks. But the cycles, which is the red line here, looking back 5 years, the COVID collapse, it's been a very similar sort of volatile move to the upside, and a time for the market to digest the move. Now, if you recall, we did have our 3-bar signal for the S&P 500 and for the NASDAQ. Get out your Gann Swing Pro. Link to this is in the top of the video description. Settings, turn on the red to the down, and this signal suggests either A, you're going to see a significant crash, or 2, there's going to be a prolonged period where the market is just going to grind sideways as it digests the move. This was the first signal here, all-time high. That was on the 15th of August at the time, of course. And then we had a down day, so the red, and the red. Lower highs, lower lows, straight off that high. And since then, sure, the market's put in a new all-time high, but it has come back down. Today's action looks like it's heading a little further at this point, but it hasn't gone anywhere from that point, and has been the longest period where we haven't seen new fresh high prices coming out of the tariff low. So it's done its job yet again, all the way from this top, pausing the market. The NASDAQ, same thing here, right from that all-time high, 1, 2, 3, and we haven't seen a new all-time high from that point. So this has been the longest correction out of the tariff low. The signal also showed up for the tops for the S&P 500 just before the tariff collapse. So it's not to say that we're trying to identify and predict a tariff collapse. It's just saying that it looks like the market action is slowing down, and that definitely called the top slowing down. We saw it in October as well, and from that point, well, it definitely slowed down. We did get some all-time highs, but it didn't really go anywhere for a number of months. Saw the signal again off an all-time high, and then of course the market did what it did after that point. So we're at that point again for the S&P 500. Seems like we're leading in and waiting. The market's waiting for this decision from the Fed. Overall, everything is still on track for a run into this peak at the end of the cycle. We're seeing some of the cracks forming here. The yields continue to rise here for the 10-year and the 30-year, even though the expectation is that the interest rates are going to be cut. This is the 2-year, which is at the lowest here, and looks like it may come back to test some of the lows on this side of the market, 3.5%. The bonds, however, they have also dropped off in the last couple of days as well, so that's not a great thing. You've got cheaper bonds. They're trying to raise the yields here for a reason to be buying the bonds. The US dollar is also holding up okay, the last day up, but longer term still looks like it wants to head lower. Possibly still good signs here for asset prices to jump a little further over the coming years. And essentially that's what they've been doing in the short term. Gold up to new all-time high prices, 3,600 an ounce, and silver 41.70 an ounce. This has hit a new 14-year high as well. So although the market is expecting an interest rate cut, it doesn't seem like everyone is so confident in the market anymore. Yes, gold has been up for quite some time. The stock market has also been up for some time as well, but you're really starting to see new all-time highs here while the S&P 500 is not putting in new all-time highs. Interest rates for the 10 and the 30 are rising marginally, and the bonds are falling. So potentially a short-term shift here that may develop into something longer term, which is going to take a much longer period of time. I don't expect this to be over the coming weeks or months. Could be the next year or two as we look out towards the peak of the 18-year cycle. Now, before we get to that peak, cryptocurrencies, altcoins, seem like they still have another leg to the upside. The USDT dominance has hit a little mini double top here, similar to what happened last time, May and June, which then led to a correction, which is a good thing for the bulls in crypto and Bitcoin, of course. Downside, dominance on USDT flows back out into Bitcoin and cryptos. That's what we saw there. This time we're at a double top, just one day down here, and we've seen a little bit of a flow into Bitcoin and some of the other alts. Which one are the stronger ones? Let's get to that in a sec. Others dominant, so everything excluding the top 10. So basically your major stablecoins, major altcoins, and Bitcoin not included here. It is putting in higher lows, still not able to crack the 8% yet, but it's holding up. So that's the positive there, and climbing above this low from February of 7.7%. So when the time comes, it's in a good position to at least test the next resistance level at 8.8. And ideally, if we do get a massive blow off top move here for all of those degenerate altcoins outside the top 10, it's got to break through 10% here on the dominance. I'm going more so for the 10.5%. It's got to break that to get any sort of significant major pump. Otherwise, it's just a run up to resistance levels. And we should know by now, if it runs up to resistance, gets rejected, there's a much higher probability that it's going to come back down, which means the money would flow back out of those altcoins. So what is looking okay at this stage? Total 3. So this is just excluding Bitcoin and ETH. Yes, it has the stable coins in it, but you've also got your Solanas and other top 10s in there as well. And for the last couple of months, it broke 50% and has been holding above, consolidating above 50%, consolidating above the resistance levels of around $950 billion, still sitting at 1 trillion, 104 trillion, and just shy of the previous tops here at 1.16 trillion. So what does that mean now for the market? Well, in the stronger camps, Solana is back into the stronger camps, sitting above 50% of 195, tested it a couple of times, and then the next resistance is at 210. So this is the level from March 2024. So a close above that, that is going to be some good consolidation, ready to test the previous tops at 260, 295, and of course the psychological level of $300. Ethereum, on the other hand, has been dropping through this period of Solana moving higher, and it's put in more days to the downside compared to all of the other corrections it's had since June. So June it did 11 days down, 6 days down, 6 days down. Now it's at 8 days. So we're starting to see a bit of a shift here from the bulls to the bears. You can see the energy is left Ethereum. You're not hearing about it as much. If we are hearing about it, people aren't paying as much interest in it. And that's not like an opinion, that's just what's happening out there right now. And you can see it from the price action, the objective nature of the charts here, getting rejected at $4,500, the short-term 50%, currently at $4,290, and the next support's around $4,000. So it's just, in my opinion, a time for Ethereum to consolidate the gains it's had over the last few months, and fantastic gains they have been, low to high. That's been 257% over 137 days. Surely it needs some time just to consolidate the move to the upside. The corrections, we've looked at 20 to 30% down, roughly speaking. 20% takes you to about 3,900, 30% takes you to about 3,400, and it's still in a bullish structure if it holds above 50% at 31, 3,200, being 34% correction there. So it's not to say that it's going to get there, but anywhere in that zone is still above the 50%. Ideally, it stays roughly around these tops, which also line up with the previous tops here. So somewhere above sort of $3,800 while it consolidates. Any moves there, bounce higher. So what does it mean for altcoins if Bitcoin goes on this suckers rally? We get this move higher, rejection, and then it starts to come back down. For the dominance, we'd likely see the dominance head higher. Somewhere around 60% is the first resistance level, and then I'm looking up to about 62%. You can see the tops here. You can see the lows here. You can see these other tops as well. If that got a really big move on it and we saw a significant correction in the top 10 altcoins, we saw XRP come down, Solana maybe hold more of the gains, and Ethereum start to lose some of those gains too, then we could start to see the Bitcoin dominance run up to about 62%. Otherwise, if it's a relatively shallow correction for the alts while Bitcoin also corrects after its little suckers rally, then probably around that 60.5% level for the dominance. So if we start to see the rejections there and the rest of the market, Bitcoin start to hold its base after the rally and the correction, and you start to see that run higher, then we would expect the dominance to hit some resistance, start to fade away again. In that time, Bitcoin could have done that and start to rally higher. In the meantime, some of the stronger stuff may have head up, continue to hold its base, and then it's also starting to head higher, and things like Ethereum may have done something similar. Maybe they've already washed out their move and then they start to head higher as well. So that's what I'm looking out for over the course of September, especially with the interest rate announcements coming up, the S&P 500 just tucking down here, putting in another down day, and some consolidation into the period of September. The NASDAQ not really going anywhere, which we know in the past has been somewhat correlated, well, Bitcoin's been somewhat correlated to the NASDAQ. Again, here it's only just marginally put in some higher highs, now in a lower high formation as well. So I think the market's still trying to figure out or waiting on one thing in particular, this, and should we see the rally, the correction, and then the base begin to form, that could be a nice early signal that we're about to see some higher prices here for the rest of the cycle. Hit the like, subscribe to the channel. Don't forget the reports are coming out this week as well. So check your inboxes and spam if they've gone through to that. And I'll see you guys back here at the next video. Till then, take care and peace out.